Hey everyone, this is Christopher Terry, CEO of iMarkets Live, and I'm just giving you a video update for the day, our daily swing trade alert. In our prior video, we looked at the gold market, which is the XAUUSD, and we looked at the fact that the market had went through what they call a sideways line. You can see it right here. Basically, all this action right here, big sideways line. We're looking at on a 4-hour chart. Market broke to the downside and it put in its low. Now we're looking at this type of action. The question is, can we put a higher low here and try up again? This is not an area to buy because the market's just broken from the downside. Very, what they call a strong breakdown. Oh, that sounds ironic, right? A strong breakdown. It's strong to the downside in the fact that the impulse and the trend is to the downside. What we're looking at now is you have the fact that the market went down, gave a bounce, gave a retracement, and potentially for a move up. I would not buy this because the market overall is still weak. We don't want to take that chance because it could always just flush. What I want to look at is any retracement back up to 12, looks like 1280 to 1291. Anywhere in this zone will set up a selling opportunity. So for now, just you got to be patient with that market. That's the XAU USD. The other market we're looking at here is the GBP USD. As we recall, the other day you had some kind of a flush in the market, and I guess that just goes to show they say that the markets can't be manipulated, but quite honestly, look what happened. All right, so don't trust anything out there. The fact is, the market had, and I was talking to one of the traders yesterday, and we were still in this down. Oops, you had a flush to the downside. Market gave a shot down, up, and then has been lower lows, lower highs on the way down. The trend has been to the downside where it had its final flush. It hit the 786 support level. That's really important that we got that support in there and based out and now has given a rally to the upside and now a retracement. What I'm looking for is I'm liking the buy side with the risk right down here 1.209. So if you want to keep your risk low, just keep a 3% overall risk on the market. What does that mean? Let's just take a look. So prices around here, right to around there. You got about 180 pips. So keep that in mind. You have to have the bank account actually to support that also. You don't just want to get into trouble. So as you see here, and I want to point this out, is on the hourly chart, the market flushed to the downside, then a shift in momentum back up, and now the retracement. Flush to the downside, shift in momentum, back down, and now we're looking for this market to go higher. So if you have the capital and you can keep yourself to a 3% risk, and what does that mean? 3% means $30 per thousand. Thousand in account, cash. Not that you have 100 and you got a 10 to 1 extra leverage from your broker. That means you have $1,000 in cash, you risk $30. You don't want to risk any more than that. So if your account cannot support it, do not trade it. I'm just giving you some analysis. I know a lot of people like to look at the GBP USD, especially after there's the volatility that happened, and you want to wait for that shift in momentum. And right now, this is an ideal time to watch. And you know what? Keep a tight risk. And if it turns for you, great. But at least you can keep a minimal risk. I can care less if it's 20 pips or 100 pips or 180 pips. The fact is, keep a low percentage risk on the account. That way, God forbid you take a loss, you don't get hurt. You never want to get hurt on one trade ever. And a lot of people learned their lesson last week when this whole re-Brexit thing or whatever happened there made a flush and wiped a lot of accounts out because everybody wants to be the big trader until a big move comes in their way and wipes them out. You don't need the drama. Put yourself always at a risk of minimal risk percentage. Always. I'd rather see you take $1,000 and in 1 year bring it to 1,600. It doesn't seem like a lot, but where do you get a 60% return in any investment? Don't be the guy that takes 1,000 to 6,000 and then you're negative 6,000. Grow your account over a period of time, because during the course of this time you will have issues where the market does things that you don't expect. The last time we saw this was in January of 2015, where the Swiss franc, okay, was it 2014, 15, wherever it was, the Swiss franc depegged from the EU, and the markets went into a haywire. All right, everybody got hurt. I believe it was last year and a half ago. Anyway, keep your risk always small and grow your account, because you will have losses, but you always want to go higher over a period of time. So the message tonight is, if you do trade any markets, especially anything in the GU or any kind of British pound pairs, always low risk. Don't get hurt on one trade. Have yourself a great day. My name is Christopher Terry, and I'll catch you on the next go round.